Hello. Are you looking to upgrade your business structure and unlock growth opportunities? Converting your partnership into a private limited company could be the right decision. A private limited company, Pvt Ltd, offers legal protection, credibility, and better financial prospects, making it the preferred choice for expanding businesses. Let's dive into why, when, and how you should convert your partnership to a private limited company. Why convert? So, why convert your partnership to a private limited company? Here's why. Limited liability protection, better fundraising options, increased credibility, perpetual succession, tax benefits, ease of ownership transfer, legal framework for conversion. The legal framework for converting your partnership to a private limited company includes Section 366 of the Companies Act, 2013, Companies, Incorporation Rules, 2014, Section 4 of the Companies Act, 2013, Step-by-Step Conversion Process. Here's a step-by-step process to convert your partnership into a private limited company. 1. Obtain consent. All partners must agree to the conversion. 2. Draft MOA and AOA, Memorandum of Association, MOA, and Articles of Association, AOA. Define the company's objectives and governance. 3. Apply for name approval. Ensure the name is approved by the Registrar of Companies, ROC. 4. File conversion application. Submit Form 18 and Form 1 to the ROC for approval. 5. Issue share certificates. Partners become shareholders of the new private limited company. 6. Transfer assets and liabilities. The business operations automatically transition to the new entity. 7. Obtain incorporation certificate. The ROC issues the official certificate, and the conversion is complete. 8. Register for taxation. Update PAN, GST, and other tax registrations. Required forms for conversion. The following forms are required to complete the conversion. Form 18. Application for conversion approval. Form 1. Incorporation document for the new private limited company. Form 32. Appointment of directors for the new company. MOA and AOA to define the company structure and operational guidelines. Essential documents required. You will need the following documents for the conversion: partnership, deed, resolution from partners, registered office proof, PAN and Aadhaar of partners, financial statements, affidavit from directors, post-conversion compliance. Once the conversion is complete, ensure you stay compliant by annual ROC filing, appointment of auditor, tax and GST filings, annual general meetings, AGMs. Maintain company records, timeline and cost of conversion. Processing time. The entire conversion typically takes 30 to 60 days, depending on ROC approval. Costs include government fees, documentation and filing charges, legal and professional consultation fees. How Filings Corner can help? At Filings Corner, we make the entire conversion process smooth, quick, and compliant. Expert consultation, complete documentation, seamless ROC filing, post-conversion support. Contact us today or visit www.filingscorner.com to get expert assistance and start your conversion today. Filings Corner, making business transitions smooth, legal, and successful.